So, one of the final sessions. Bradley Rourke, President and CEO of Scottie Resources. You've got a background in corporate finance, and across 3 decades, he's been a partner in an investment firm, a sales director at an institutional flow-through fund, and he's had on-the-ground experience with startups. Bradley Rourke. You're focused on the Golden Triangle there. You've got the former Scottie mine. How important is that, this former mine there? And then you've got Newmont nearby with Bruce Jack. Pretty exciting district to be involved in. Tell me about the legacy of that and how it informs your company.
Sure. I'm an accidental CEO. I was kind of living in a town just really close to the area in a little town called Smithers. And it was the actual tritium when they were building that power line to the Bruce Jack deposit is kind of when I'm like, hey, infrastructure, there's a past producing gold mine. You want to find gold, go to where it's found before. And so it was this concept and a great idea that started out as an investment. And then here I am, I just finished my 9th season. And, I never anticipated running the company. It wasn't my initial, what I wanted to do or I had thoughts. But here I am. I've never worked 9 years on anything in my life. So it's been quite a challenge. But lo and behold, we just seem to have had a lot of success, and we're creating value. So it's it's getting fun now. It's been very difficult,
right?
But I think we see a light at the end of the tunnel now, and it's not a train.
It's not a train. That's a good one. So you've got some zones there. You got Blueberry and Domino, as well as the past producing mine itself. How do they fit into the larger project? What's going on there?
Sure. So one of the things when I was naive and I kind of took this company over because it was one of Don McLeod's first mines, that was Scottie. My mistake, it was only 400 hectares, right? And so that's not going to move the needle. You're not going to get the right kind of money to support something.
Right.
So, I've done over a dozen transactions. We're 58,000 hectares. Blueberry was one of those transactions. And It was a vein. It was about another 400 hectare piece of land. They were originally together back in the 80s, and then, some prospectors split it up and do what they do. So we brought that back together, but it was the biggest transaction. I think 2018 we bought that. It was $1 million, and I bought it because I thought the vein was going east-west. And then Thomas, our vice president of exploration, kind of redefined it. We had a discovery hole in 2019, but we didn't even understand it was a discovery hole until perhaps 2020, 21. And then where Thomas goes, I think this thing's running north-south and not east-west. And then once we had that concept, we just never looked back. And if you look at, we've just been very lucky with the Blueberry. It's kind of changed the trajectory of the whole company.
And then Domino?
Domino is exciting because it's on the other side of the Scottie gold mine. And we've drilled it. We haven't gone back in a couple of years just because of the helicopter aspect and money's so expensive, right? So we tried to do the least little helicopter work as possible. But we did drill, I think we've got about 2,000 meters in there, and we found the grade. Okay. Didn't really get the widths that we want, but we want to go back to Domino, but I think because we have lower hanging fruit, but certainly it's going to be a big part. And like I say, grade's there. We just need to put more holes in there. And
then you're also active in the Stewart mining camp.
Correct. So we have 7 past producing mines on our tenure, and everything's paid for.
Maybe we should, we don't have a map, but it's further south. There's so many kilometers.
Sure. So the Georgia River would be the furthest south from Blueberry, from the Scottie gold mine, and it's probably 40 kilometers away.
Yeah.
Right. But that's an old Guggenheim mine there, and we drilled it for a couple of years. And again, because of that helicopter aspect, we kind of just sit back on it. But we had great success. I think we have 4 holes, and I can't remember the exact, but it's like 74 grams over 2 meters, that sort of stuff. But it's a different type of a system. It's more of a classic quartz veining system down there. And we've just put a news release out here as we're switching gears and changing some things that we might spin that out because I don't think my shareholders are getting the value for that great piece of property.
Okay.
And when I say spin it out, I'm not going to run another co, but if we find that right team, I think with Thomas and our team, we really know how to explore well in the triangle. We could help that team, but that's just a concept right now because my shareholders are just getting
Okay.
No value for it, but I mean, that'd be better than 8 out of 10 junior exploration companies that are out there.
Right. Any kind of timeline for that?
We've got the package together now, and there's been a few groups showed interest. They're just probably not the right groups for us. And I think much like the investors we look for, it'd have to be a quality team that it just has to kind of fit with what we've been doing. So.
And so then at Scottie, you're kind of looking at joint ventures maybe, or?
No, at Scottie, I think we're really going to change. 2025 is going to be a big year for us.
Okay.
And, we've had these great 6 years of drilling, market sideways. Nobody's giving any love to any of our junior stories out there. So what we're going to do is we're about to come out with our first resource. So an MRE is going to come out in the matter of a couple months. We're already working on PEA type stuff with that.
Okay.
And we're going to show the market through a direct shipping ore situation. Exactly. We're going to force the market to re-rate us, because at a $50 million market cap, I think what we'll see here is that we'll be able to show there's a lot of value to unlock. And it's all going to happen in the very near future.
Now you've got a streaming arrangement with Franco-Nevada. How's that working out? And some people, there's pros and cons about streaming.
It's a royalty. I worked really hard to make my the company royalty free, and so what I did about 3 years ago, and my board was like, "You can't do that." And we took $2 million and we bought all the royalties back.
Okay.
Franco-Nevada offered us a royalty 2%. So I bought 3% back for about $2 million, and then we ended up selling 2% to Franco for 8.1, and they gave us equity. But what's kind of neat about that, and the reason we did it, was, for what we know, we're one of the only companies in the history of Franco-Nevada without a resource for them to give money, and it's very rare for them to give equity. And we thought it would be important for that technical validation. I mean, Franco-Nevada is arguably probably the best technical team on the planet Earth. And so we just thought, okay, obviously they've modeled it. They're looking for near-term situations. They're not looking for, to make money in 20 years. Their model is such. So I think we're hoping that the market kind of picks up on that, because it is a unique situation.
Right, and part of your focus too is like non-dilutive agreements.
Correct, and then at that time you're just going, oh my gosh, you know what I mean? It's so hard, and we had got up to 300 million shares, but actually tomorrow morning we just restructured, did a 6-to-1 rollback in a time of strength. So now we're like 50 million shares outstanding. I still have $7 million in the treasury of hard dollars, and all these catalysts. We still have lots of news from the drilling season that we did. So we just thought we just want to differentiate ourselves from others. And I was hearing a lot from the U.S. investors that if I'm 15 or 17 or 18 cents Canadian, that's like 11, 12. It's too small for some of these funds that, look, I can't invest in anything unless it's $1, or if you have a Goldman account or such, the accounts in the U.S. Charge you a penny a stock to buy my stock, right? And so a few guys, so we just said, okay, let's I'm going to really focus on the retail market in the U.S. for 2025. So we made it easier for them.
Right. Okay. Then what's your overall opinion about what juniors should be doing then when they're trying to raise money, non-dilutive? You looked at streaming and royalties, private equity. Is that a factor in your calculation?
It is. So we've been lucky for raising money, I suppose, and I've been quite selective. We've got quite a trophy case of very, very solid investors. I hadn't focused on the retail. It's tough these days for most of these juniors. I think we're probably luckier than most, but yeah, I mean, because you got to move forward. You can't sit still, so you have to.
What do you think of the discrepancy then between gold equities and the gold price? Is that ever going to rectify or improve for juniors?
It will. I mean, that's why we're here. But it's I've been wrong on that for a long time. I mean, I'm not necessarily a gold bug. I've had my business success in energy. In 2016 when I got involved, it's like, okay, it's been 5 years of tough times. It's probably going to turn in 18. I want to be ahead of the time, but here we are. The gold price has done what I was hoping to do, and in fact, it's exceeded probably what I thought. It's really difficult to understand why the equities haven't shown up, especially down where we're at the bottom of that chain. But what I'm hopeful on is you look at the Kinrosses and the Alamoses, these companies have actually started to do well in the last 6 months. And from my perspective, they have to do good before that stuff starts trickling down. So that game is on. So I'm actually quite excited. I'm re-energized. 2 years ago, I was going, oh my God, what have I done to myself? Right? Okay. But now I look at this and I'm going, I think even with the team and some of these new initiatives we're doing, we're actually all pretty energized right now.
And so you have Newmont as a neighbor. Tell me more again about the infrastructure in the area and how you can leverage that for you guys. You've got the power, you've got a road, you've got...
We are so blessed that we lack nothing in infrastructure. I even have a mine permit, right? And so infrastructure in the north as a whole is great. And that all started with the Northwest Transmission Line. So I was part of the Eskay Creek staking rush. I mean, I cut my teeth working with Murray Pesum and doing all his staking and such. But the problem with the north was there's no infrastructure. Heck, from Mesiaden to Dease Lake wasn't even paved back then, right? But now it's all that big infrastructure's in. Now we got a hydro line that powers Bruce Jack from the Long Lake, and you're going, okay, there's roads for us. Now, Golden Triangle could be pretty rugged for some companies, but we're kind of like 40 kilometers from the deep water shipping.
So your CapEx could, potential CapEx could really benefit from this development.
Correct.
Yeah.
There's other examples out there of companies that are way ahead of us that we think that we're comparable with. So we're going to show the market that here in the next little while.
So going a bit longer term, how do you expect to monetize on Scottie?
Oh, we're going to put money, we're going to put economics to this in the very near future. And because Kevin Jennings just joined my as strategic advisor, like no junior mining has a Kevin Jennings. And so his relationships with every smelter in the world, he was CFO Barrick Africa, corporate development for Glencore, like very, very big positions. He's working on financial models right now that we hope to bring out and start showing to the public. And after our MRE, which is, we hope to have that out before PDAC.
That's great. And can you give us a hint on some of the grades there you're hitting?
So our drilling's no better and no worse than it has been in the last 5 years, and that's good enough, right? And so we still got a lot of news to come, and I think you can just expect exactly what we've been giving in the past. But what you have to understand is all these holes are working together, right? And so, you want a little bit more, just give us a call. We'll put you on a Zoom call and we'll go through the 3D models. But so there's news coming, and we still don't have it all, but I'm not worried about the news.
That's good. What do you think your biggest challenges are besides, capital raising and the market that way?
Well, it's tough. For me, from a business point of view, it's taken a lot longer than all of us. I mean, I'm an investor and invest in many companies, and regardless if we've done everything we said we're doing, I get scared of it just getting old, right? Because I mean, junior exploration is supposed to be exciting and it's risk. And unfortunately, when I cut my teeth, if you wanted risk, you'd go to junior exploration. Now you got kids trading derivatives on their phones. They don't even know what they're doing. So there's an appetite for risk out there. It's just dispersed through many industries now, and where it used to be, so I think I get scared that it's going to get stale. And so that's why we're kind of making a few moves here. We're going to just switch the narrative up.
Okay, and then looking geopolitically about the gold itself, where do you see the next year happening? We have this new president coming into office in the United States. We got him tossing tariffs around and stuff, and maybe that's good for the gold price if it's risky.
I don't think it mattered who came in, and the gold price is going to go up because they're going to continue to print money. And I'm a Canadian, so how I look at it, eventually the U.S. is going to purposely devalue their dollar. So this is all good for gold. The tariff thing is whatever it is. I mean, I'm an oil man. They're not putting tariffs on the oil because that will hurt them. I think it's a lot of noise at the moment. I mean, certainly it's going to hopefully wake our government up to go, look, we have to be competitive.
Right.
I think it might be a little bit of short-term pain, but it might be good for us in the long run just to understand how things work. But either president, I think, he's not going to stop printing money. I mean, Donald Trump loves debt, you know what I mean? He's a leverage, transactional kind of guy. It's only going to do well for the gold price. It's actually the G7 or the North America that doesn't love gold, but you look at all the central bank buying and stuff going in around the world, ever since the end of the Basel III, it's a tier 1 asset. I don't necessarily think people understand how good that is, because an ounce of gold's worth an ounce of gold on your balance sheet, where prior to 2018, I can't forget, it was only valued at 50 cents on the dollar.
Right. Yeah. And then south of the border, even if the Democrats got in, they would have increased the deficit too. Yeah.
Unfortunately, it's 100 trillion in debt. I mean, 35 trillion, and then off balance sheet stuff. How do you pay that? And again, I think gold is just an abacus, right? This suit costs about an ounce of gold. A toga costs an ounce of gold, hundreds and hundreds of years ago. And that's just keeping pace. But there are moments in life where gold actually gets up, and maybe 3 times. And I think we're about to go into one of those moments where it's actually going to, FOMO will hit and people are going to.
Right.
Yeah.
Now, operating in Canada, in the permit situation, you say you've already got a mine permit there, but maybe you've got to get some new environmental or social license kind of permit.
Well, you always have to do a social license. I think I have an advantage being that I raise my kids in the area. We work mostly in the Nisga'a territory, which is the only treated First Nations in British Columbia. And so far, so good. It's been wonderful. You don't want to take that for granted, but we have had no problems. It's been a pleasure for us to be working with the Nisga'a, and I don't see that changing anytime soon. And like I say, there's people in that nation that are leaders I've known personally for 30 years. So
British Columbia has brought in a new mining office to help speed projects. Do you see that a step forward, or too little, too late, or what's the story there?
Well, I can't really say my political opinions, but I mean, it's a step in the right direction. And so you always got to be hopeful that these things work and the way they're supposed to. I mean, it's great, but more government's not the answer.
Right.
It's just, every year it's a new kid I'm dealing with where it's.
Bradley, do you want to hit a couple of the themes about why Scottie Resources is the place to be, to sum up?
Sure. I think, we've got enough track record that you could either trust that I'm going to do what I say I'm going to do. And every video I've ever done is on the website, so you can kind of go judge, the progression of this company. I go, we're hoping, I'm targeting there'll be 1 million ounces that come out here in the next couple months, but we did it for such little drilling and such little money. I think, one of the great things that happened to us this year was Michael Gray picked us up and started writing about us. He's suggesting 3 million ounces. I've never actually
That's
stretched.
The analyst.
Michael Gray is a very respected analyst in our, especially at the level I'm at. And but I'm very comfortable saying I'm targeting 2 million, whereas only last year I was always told, a lot of these people have heard me speak before. I was like, I just want to show a pathway to 1 million ounces.
Right.
We're clearly had better success than we thought. We've managed the money well, and I think again we're going to force the market to rate us at $50 million valuation where we are right now. We're going to put some octane to that and just change the narrative and start talking more economics.
Right.
Yeah.
Because you've got this resource coming out in the first quarter. That's to look forward to. And
and then we're conducting ore storing studies right now. We're talking with smelters. We're actually going, okay, because we're one of the 3 mines in the world that close to it, deep water. So I think Green Park that Hecla owns is the closest.
Right.
The second closest is SCOT, which is my neighbor.
Yeah.
And we're going to drive right by him, and we always just assumed we'd find a deposit and then we would fit together with that eventually. And they've just had some challenges, and I think they're going to work it out, but we just can't sit and wait any longer because time's not my friend. So we're going to.
So you have been talking, but anyway.
Well, they help us out. We help them out. I mean, I think Derek's a great guy. I've never seen, when I feel bad about my life, I just think about Derek and I feel good about myself, right? Because he's had it a lot tougher, and there's a whole bunch of curveballs that they've gotten. So I think the market just assumed that this would come together. And who knows what happens in the future, but we're just going to have to take our fate into our own hands. And because we have that permit and the power, everything's there.
Yeah.
And we think, from our point of view, and we've done a lot of studies, is that from the moment I say go, which means I'm going to commit to a whole bunch of money, I could turn rocks into dollar bills in about 30 months.
Fantastic. Do we have any questions from the audience? Anthony?
Any questions for Brad?
Where's the bar?
Are you up front?
Oh, no. Sorry.
That's a tough cookie there.
Brad, one of the most difficult things in the type of vein mining is very difficult to actually get to be successful in a mining operation. So you're in the Lassonde curve that's in the exploration phase, and it's hard in itself to take it to the production level. Have you looked at operations, vein mining operations that you prefer?
Well, because Scottie was a past producer, I mean, this thing recovered 16.2 grams. That was the recovery rate with a 10-gram cutoff, right? So we're at ore at faces. I think we just do small mine veining at that Scottie. Now, Blueberry is a little bit different. It's a lithological contact, and it starts right at surface, and it's on flat ground. So we imagine you're going to see a bulk tonnage situation for maybe the first 100 meters along that contact, just steeply vertical, straight up and down, and as you put declines and go mining. But I think the stope mining that they were doing at Scottie, again, at a 10-gram cutoff, it was coming out with 16.2 recoveries. So I would imagine that would be the route that we'd going again. That's a better conversation for Thomas, and we're not quite there yet, but it's a great question. But we have this resource is going to come out, and it's going to be a little bit of everything. Scottie's high grade, we anticipate that'll be over 10 grams that we get there. The top part of Blueberry, because you're taking everything, that bulk tonnage, hopefully, and now again, these are just forward-looking statements, but 3.5 grams I'd be very happy with. And then the underground at the Blueberry, let's just say it's 6 grams right now, and I think I'm underselling, and so we don't disappoint anybody. But we just don't have enough drilling down below Blueberry. Like, we've only drilled total property 70,000 meters, but what we're going to see is really just 55,000 meters. So that resource coming out with that little of drilling should make people excited, because there's so many examples of company XYZ. I don't want to put them out. 500,000 meters of drilling coming out with a resource of 1.4 million. And, if we achieve 1 million ounces of high-grade gold for 50,000 meters of drilling, 55,000 meters of drilling, I think that's quite exciting.
Sounds all good.
Yeah, thank you.
Bradley Rourke, pleasure.
Hey, my first fireside chat. It was a big day. Ross Beatty mentioned me in his talk, and I'm like,
Man,
like
you're
a
a star.
schoolgirl. That's right.
You're on a roll, Brad.
That's it.
CEO, Scottie Resources.